How unusual is that?
Well, a couple of companies actually do business without bankers, but such a young company sometimes likes to have a few key advisors around. In this case, Mark Zuckerberg, thinks that he's got the right stuff when it comes to deal making. And let's not forget, there are a couple of things that work in his favor when it comes to making deals. One is the company has a reasonable amount of cash, but also let's not forget, most of this deal is in stock, right? So you don't necessarily need any financing from bankers. And not only do you have stock, but you have a very valuable stock, one that he realizes is probably pretty expensively valued. So he's going to try and use that currency to make deals. Like, for example, the WhatsApp deal, most of that deal was in stock too, $12 billion. So let's not forget the importance of that. You talk about the timeline of these deals come together in 4 or 5 days. WhatsApp too came together in 4 or 5 days. This one was, a marathon session at Facebook headquarters with a couple of guys.
But was Oculus protected here? I mean, clearly Facebook has its protection, especially when it's only, $400 million in cash. But what about Oculus? Didn't they kind of need some advisors here?
They don't even have a product yet.
So no.
And they're getting $400 million in backing of one of the most powerful companies, internet companies in the world. I mean, this is a stellar deal for them. They need the development money. And look, you can spend millions of dollars on diligence. You can spend millions of dollars on advisors, and that goes in the pockets of, the bankers.
Right.
Why not keep that for yourself?
So are bankers sort of looking at these kind of deals and getting nervous that they're missing out? And do you think they're going to be taking steps to sort of court maybe startups that are popular?
I think bankers always try and get to the startups that are popular. But here's the thing with bankers that's really interesting. I've had conversations with them about these kinds of high-profile deals. The bottom line is it's great to be on them from a branding perspective, but sometimes you get so chipped down on fees that it's almost not worth the hassle because the company knows that the banker wants to be on the deal, so the leverage is on the side of the company itself. And a lot of big companies, especially Fortune 500 companies these days, will actually start out the beginning of the year with a certain dollar size that they know they're going to pay banks. It's called a wallet. And they're not going to move on that. So there's a lot of tense negotiation with bankers on fees for big companies, for high-profile deals. When a banker's like, look, I can go in the middle of the country, help some paper company or some steel company negotiate a $500 million deal, and I get paid more on that deal than I will trying to work for, a high-profile deal like a company like Facebook.